Hello, I'm Kathy Talbot.
And I'm Dan Gemus.
We're sales representatives with the Dan Gemus Real Estate team at RE/MAX Preferred Realty.
Today we're here with Susan Riom. She's a mobile mortgage specialist with RBC. How are you, Susan?
Very good. How are you too?
Great,
We're
thank
fantastic, thank you.
Excellent.
So Susan, we're going to talk a little about mortgage pre-approvals.
Yes.
So can you tell us, why are they important?
Absolutely. A pre-approval is actually your first step into obtaining your home and to your home search.
Well, Susan, when people call us to look at a house, our first question always is, have you been approved for financing? But there's a difference between an actual pre-approval and a pre-qualification, is there not?
Most definitely. A pre-approval is about 80% to getting a firm approval, where a pre-qualify is more of a high-level overview. So a pre-qualify may just look and say, oh, you're making X amount per year, but not necessarily can you afford that mortgage payment because you may have other debts and liabilities.
Now, oftentimes we have buyers that will say, "Oh, well, I went on my bank's website and there's a calculator there, and I punched in some numbers, and I'm good to go up to $2 million."
Right, and that's
so.
That's not necessarily, the right way, because you need to consider whether or not you can service it. You also need to visit credit history to see if there's any bumps or hiccups along the way, and you also need to review down payment. So having a meeting with myself, I'm a mobile mortgage specialist at RBC Royal Bank, so I can meet your clients either at our bank, at their home, at their place of work, whatever's convenient for them.
That's excellent that you're mobile. I love promoting that. And speaking of down payment, they have to have 5% down, correct? No matter whether they're a first-time buyer or not. And where can that down payment come from? Do they have options?
Yes, they do actually. Last year in 2012, the government did some slight changes on the 5% minimum down payment in Canada. However, typically what clients are using are bona fide savings, so the money has been sitting in their account for 90 days. There's an option to have it gifted, so if you have an immediate family member, they can gift that to you. And you can also utilize RSPs. That is most ideal for a first-time home buyer because they're tax protected through what's known as the home buyer's plan. So they're allowed to pull out $25,000, up to $25,000 of their RSP funds and repay that over a period of 15 years. So it's prorated over that period of time.
So as a buyer, you have down payment you have to be concerned about.
Yeah.
You have your credit history.
Correct.
Anything else?
Yes, actually, you do need to look at that income confirmation to see. So essentially, there's three things. Income confirmation, and it's slightly different if you're hourly or salary versus self-employed. That's why it's important to meet with me to understand those different nuances. The credit history, so we look at existing debts and liabilities. If there are a few bumps or hiccups along the way, that's why it's so critical to have a pre-approval so we can work through that, get that out of the way, and then we can obtain a firm approval at that point.
So once they're approved,
Yes.
how long is that approval good for? And is it finished? Is it firm right up to the day they buy their house?
Well, a pre-approval is 80% to a firm approval. So a pre-approval will hold a client for approximately 60 days or 120 days, depending maybe if it's a rate sale. But generally speaking, 120 days most often. Once you get a firm approval from RBC Royal Bank, it is a firm approval. You don't have to worry about anything coming back, say an appraisal or income verification, or if you went and obtained, purchased some furniture, you are good to go. So it's 100% peace of mind.
Excellent.
Wow, okay, so basically then you have your credit check,
Yes.
you have your income confirmation,
Yes,
and you have your down payment.
that's right.
So once you have all of those things taken care of and you are officially pre-approved,
Yes,
then you can go ahead and
you can go ahead and shop.
And then when they shop, they find something they love,
Yeah.
they write an offer, and then that offer is submitted to you, and that's how they get their final
Firm
step
approval.
done. Okay.
Yes, we package that all together. If it's been some time, we may need current documents from the time of the pre-approval, but we've already done that step. We already know exactly what we're going to need to be able to submit the package.
And it's also important to note that the bank does take into account the actual property.
Absolutely.
Oftentimes, people will say, "Oh, Dan, I'm pre-approved. I'm good to go. I don't want to put a condition of financing." No, we're still putting that condition of financing because
Right.
they have to look at the house itself.
And nothing is guaranteed in life anymore. You just want to make sure that you set yourself in the best position possible.
No doubt.
And does the bank send an appraiser out to the
Not
property?
every time. There are different criteria, and we would review that.
Okay.
So not necessarily.
Perfect. Well, thank you, Susan.
Well,
Definitely
thank you
appreciate
for
the help
having
with this video. And if you have any questions, Susan's information will be on the following screen as well. Thanks again.
Thanks for joining us.
Thanks.